сконцентровано зло.
Concentrated evil has visited our land. The killers, executioners, rapists, marauders who call themselves an army and who deserve only death after what they've done.
We also made very clear that China should, if not support, at least not interfere with our sanctions.
I've been listening to both banks and businesses talking about what's actually happening on the ground. The banking sector is also fully committed, as is industry.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Here's what's coming up on today's program. Europe warns Moscow faces new sanctions for possible war crimes after reports Russian troops executed unarmed Ukrainian civilians. Russia denies this. China's COVID crisis deepens. A surge in cases prompts curbs over the entire financial hub of Shanghai. And the London Metal Exchange under review. The Financial Conduct Authority says it will look into the LME's managing of the suspension and resumption of the nickel market. Now, first up, let's check in on the markets, and it's really filtering through all this hesitancy or unknowns into the markets. The European stocks actually started the day on a high, gaining some 0.4%. Now it is pretty much flat. Again, European stocks actually struggling for traction. We did also see a reversal when it came to U.S. futures. Traders weighing the latest developments in the Ukraine war. If we have extra sanctions, that means higher inflation. What does that mean for growth? What does it mean for central bank policy? Now, one stock we need to watch out for is Telecom Italia. It was earlier losing more. Now it's down some 3%. It's a story about due diligence. Telecom Italia really has been at the very forefront of some of the corporate stories that we're watching out for. KKR interested in Telecom Italia and then saying now it will walk away if it doesn't have due diligence. Look for the 230s. That curve, the inversion of the curve after the employment figures in the U.S. is very interesting. And then crude oil, WTI at $100. Now, we're also getting some breaking news out of the EU. The EU saying for, I believe, the first time that Russia is responsible for atrocities in Ukrainian towns. Now, we had heard, of course, calls from certain EU government leaders that they will prop up some of the sanctions because of those horrific pictures that we've seen in towns, including Bucha. For the moment, we had not heard officially that they were calling them atrocities or that they were directly saying it was Russia. I think it's one of the first times that we had. Of course, what we need to figure out is what the next step for the EU is if they say that this has been definitely committed by Russia. The impact, and this is partly due to the nuance of this, the impact on the UK, which is now pretty much flat, and the CAC 40, which is down some 0.5%, is, I am sure, traders weighing extra sanctions, what it means, and whether the next step between the relationship, of course, of EU countries and Russia is actually a full oil embargo, and what that means for central bank policy and just the robustness or not of this European economy. Now, China's COVID-19 situation is on knife's edge with a lockdown of its financial hub intensifying amid a surge in new cases. Now, this as 25 million people in Shanghai face restrictions. Now, for more on all of this, we're joined by Bloomberg's Jenny Marsh. Jenny, what does this actually mean for Hong Kong?
Well, this marks the end of a very tumultuous period in Hong Kong. You know, these 5 years have seen Beijing impose national security law, the biggest protest in the city's history, and more recently, some of the strictest COVID curbs in the world. Hong Kong's borders have basically been closed for more than 2 years. So, you know, there are people who say it doesn't really matter who comes next and replaces Carrie Lam as chief executive because Beijing's in control. But actually, I think, you know, there's quite an interesting debate now and a sort of race between the potential contenders for her role. There are two main names that have been floated to succeed Carrie. First one is John Lee, who is a former police officer who's sort of risen to become the city's #2 official. And the other is Paul Chan, the financial secretary, who's a much more pro-business figure. So really, you know, for replacing Carrie now, we're potentially looking at a race between a sort of more pro-police national security figure and a pro-business figure, and that could take the city in a very different direction.
Yeah, and how has, first of all, Hong Kong really changed over the last 5 years? I mean, some say it's almost unrecognizable given the crackdown on, of course, democracy activists, but also on COVID.
There's been a remarkable change throughout Carrie Lam's period. You know, after the protests, the national security law came in. That law and the police department that it created has seen half of the legislature's pro-democracy sort of leaders. Most of those now they're in prison awaiting trial. The city's media, once a kind of famously sort of freewheeling, a lot of the pro-democracy outlets have simply shuttered. We have seen the committee that votes the chief executive has also kind of been remade and sort of stuffed with pro-Beijing loyalists to ensure that China really has control. So the overriding message is, Carrie Lam failed to hold the line when it came to one country, two systems. There's a very delicate balance between the power she had and the control in Beijing. And Beijing has gained more and more control throughout her 5 years in power that will be very difficult for the city to ever get back.
So, Jenny, how is China handling the growing COVID crisis now, and how will the policy change in the future?
It seems to be reaching something of a pivotal point. I think Hong Kong has been a sort of a warning case for mainland after COVID ripped through this city, and we had a huge death toll here due to the under-vaccinated elderly. And mainland China has a similar problem that its elderly population is not vaccinated enough. So Shanghai at the moment is battling the Omicron variant, just as Hong Kong has been doing since the beginning of this year. And we're starting to see pockets of resistance. A post is going viral this weekend on Chinese social media with a CDC official there saying that the COVID policy of sort of locking down the city of 25 million people of Shanghai is a political strategy and not a medical one. So we're seeing some friction now with COVID zero, but it is a political strategy, and Xi Jinping's government's shown no sign letting up with it.
All right, Jenny, thanks so much. Jenny Marsh there from Bloomberg, of course, China. Now, joining us, Bloomberg's markets editor, Christina Kino, and Russell Investments, Andrew Pease. Thank you both for joining us. Christine, there's a number of things we need to look at, but what seems to be most significant is that we started off the day on a high, and actually we've seen that a really quick reversal when it comes to equities. And if Russia, as confirmed by EU leaders and the EU, committed those atrocities, are we looking at some kind of furthering up of sanctions, and is oil embargo the only thing left?
Well, Francine, I mean, certainly extra sanctions are definitely one that investors are watching out for. There's still not a lot of clarity on that front at the moment and whether the EU will actually implement them, but certainly the next risk for investors to watch out for. And yeah, of course, the energy question still very much lingering in the background. And I think this is the difficulty of any stock rally at the moment, is that while, there is this feeling that markets are definitely ready for some good news and are looking for those catalysts, there's still very big underlying risk-off factors lurking in the background and could potentially kind of cut short any budding rally that we see. And that's exactly what we're seeing this morning.
Andrew, I mean, this seems, fairly significant. As soon as you see those horrific pictures and you have fighting talk from the EU, what comes next in terms of sanctions?
Well, this has always been one of the issues ever since the war started, which was what would Europe do, particularly about its dependence on Russian energy exports, and most particularly about its dependence on Russian natural gas. Now, we may well see some sanctions on oil exports from Russia, but oil is much more easily rerouted. It's natural gas that's the big issue. So far, it does look like that Germany is being reluctant to impose those sanctions because they're so heavily dependent on natural gas. But obviously, if Europe was to cut off its access to Russian natural gas, that would be a significant economic shock, and that would then probably send the European economy into subtrend growth over the remainder of the year, I would expect. So I don't think it will happen.
No. Okay, you don't think it will happen, Christine? I mean, overall, we started off very, very briefly. The markets were kind of buoyed by the fact that there could be some kind of an agreement between the U.S. and China, which would mean that a lot of the Chinese companies would not have to delist from the American stock market. Does that, at the margin, give a bit of support?
A little bit, Francine, for sure. I mean, again, the positive start to the day, and you're very much taking away the positive situation that has unfolded there on the audit issue. But again, when you take a look at the broader news flow out of China, it's really not looking great. Whether we're looking at the potential lockdowns that are coming, or now we have the Hong Kong leadership transition adding to the risks, or even just this idea of, again, the Chinese slowdown, which is still something that's bubbling in the background and separate from the COVID situation. And all of this put together, at the moment, if you're an investor and kind of just looking at China from the 30,000-foot view, you're not going to be hearing great things about it. And I think there's still a lot of caution there for sure.
So, Andrew, how do you look at China?
Yeah, China's been a challenge for quite some time, particularly ever since Evergrande had those problems late last year. The lockdowns certainly aren't helping, but I think the biggest puzzle has been, and what we're all waiting for, are these signs of stimulus coming through. We've had the official forecast come through from the Chinese leadership of 5.5% GDP growth for 2022, which did suggest that stimulus is on the way. We've had the Vice Premier talk about having some support measures come through, but what we've seen so far has been quite small. And I think all investors are waiting for more significant stimulus, because all these lockdowns do is raise the risk of sub 4.5% GDP, which would be too much of a miss. So it's just making it more likely that we should get some significant stimulus announcement sometime, not too soon. But if that doesn't happen, then obviously then China continues to be quite a challenging place for investors.
All right, so thank you both. Bloomberg's markets editor, Christina Kino, and staying with us, Russell Investments, Andrew Pease. Now, in the meantime, we're just getting some breaking news. First of all, out of China. China ADRs are up in the U.S. pre-market. This is on audit plans. For example, Alibaba gaining some 5%. Christina and I were looking at the market dynamics for that. Then we're just getting also some breaking news out of the LME, saying that orders from the LME for zinc have jumped, for example, 33%. That's hitting the highest since November. And then Starbucks, we have the founder, Howard Schultz, taking back over. And of course, his main message is, look, for the moment, we're going to suspend the share buyback because he's returned. And actually, he says the cash could be better spent on stores and staff. Coming up, the world's biggest independent crude trader warns that oil prices do not fully reflect supply risk. So we'll have more on that story next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the world's biggest independent crude trader says oil prices have fallen to levels that don't reflect risks, including disruptions to Russian exports. Now, this comes after the U.S. announced an unprecedented release of strategic reserves to tame fuel prices. Now, for more on all of this, we're joined by Bloomberg's team leader on energy and commodities. He's Paul Wallace. Paul, good morning. So how big are the supply risks regarding Russia? And could we see a lot of Russian exports off the market over the next few months?
Hi, Francine. Yes, well, that's certainly the view of some major physical traders, such as Vitol Group. It said yesterday on a podcast hosted by Dubai-based Gulf Intelligence that last week's drop in crude prices, which were pretty severe, it said that that drop was too much given the risk of more disruptions of Russian exports. It sees anything between 1 million and 3 million barrels a day of Russian exports coming off the oil markets over the next 2 quarters. And it says that because of that, it's actually quite surprising that oil is only at $100 or $105 a barrel.
So, Paul, how bearish are traders about the latest COVID outbreak in China?
Well, that's something that was certainly playing on traders' mind last week. That, along with Joe Biden's announcement of a big release of U.S. strategic oil reserves, was what pushed prices down so much. Vitol is in the camp that says, actually, hold on here, China will be able to contain this latest outbreak of Omicron in the country, and that because of the measures they're taking, we're not going to see a big drop in crude consumption in China. There are, of course, plenty of people that think otherwise. There are many traders that look at what's going on in China and say we're going to see a significant and probably a multi-month drop in oil there.
Paul, thanks so much. Paul Wallace there looking at commodities for us. Now back with us, Andrew Pease, Russell Investments Global Head of Investment Strategy. Andrew, first of all, how do you look at inflation? If you look at some of the stock prices, the good one, and this is a great chart that Valerie put together for me, so thank you so much for that. You look at European stocks, they offer 35% discount to U.S. stocks. Given the proximity to Russia and the dependence on oil, is that enough of a discount?
Well, Europe's looked at quite good value to the US for quite some time. If you remember, before the invasion, European stocks were doing quite well because they don't have as much technology. They had more cyclical exposure and more financial. Certainly, the invasion has given European stocks a hit. So I think the scenario in which Europe does well is if Ukraine, Russia disappears a little bit from the headlines over the second half of the year, and then we get back to where we were in January, which is the beginning of that cyclical rebound, which is seeing European outperformance. Now, we can't be sure that's going to happen, but from a longer term perspective, I still think that European stocks offer better relative value to the US because in a world where long-term interest rates are going up, those long duration US tech stocks probably aren't going to be the best place to be.
Andrew, how do you look at the inverted yield curve? Is it a sell signal?
Well, it's an alert but not alarm signal, I suppose is the best way to put it. Certainly the 2s, 10s inverting is certainly the first thing to watch. And if that continues, you obviously get more worried when you see the 3s, 10s start to invert. Usually a 2s, 10s inversion, equities can still do okay during that period, but it can often signal that a recession risk is heightened on, say, a 12 to 18 month horizon. So I think we're still a little way away from the end of the cycle, but what it's telling us is we're getting into the later stage of the cycle, which is more uncertain, more volatile, but it's still a stage of the cycle where I would still expect equities generally to outperform bonds and cash.
Andrew, thank you so much. Andrew Pease there, Russell Investments Global Head of Investment Strategy. Coming up, we'll hear more of our exclusive interview with the Dutch Central Bank Governor, Klaas Knot, on his views on tackling European inflation. That's coming up next, and this is Bloomberg.
Today's inflation, in some ways, is water under the bridge, right? I mean, this is all energy price inflation. It's coming from outside the monetary union. And our main task is to make sure that this temporary inflation doesn't become entrenched into permanent inflation. For that, we closely watch the medium-term inflation outlook, what it will do, let's say, 2 years from now. And there are sufficient indications that inflation is still to converge back to our 2% target. And as long as that is the case, yes, we can afford to be gradual.
What does it mean to, if inflation keeps on getting higher and if the supply shocks, so energy, if something in Ukraine gets worse, what does it mean in terms of your forecast and what does it mean for QE?
Well, we've already gone through a series of negative supply shocks. So in the scenario you sketch, it's basically more of the same. It would mean that the dent to growth would be even more pronounced than was already in our March projection. But at the same time, it would also mean even higher inflation for an even longer period of time. So if anything, then we should look for the most ambitious way to normalize monetary policy in a scenario like that.
Ambitious how?
Well, within, for instance, the parameters that we've set ourselves in March, that means that we will have to wind down the APP as quickly as possible. We said within Q3, well, that would imply in the beginning of Q3 rather than the end of Q3. And then after the summer break, I think all options would be on the table and would have to be on the table.
Well, that was Klaas Knot, the governor of the Dutch Central Bank, speaking exclusively to us on the direction of Europe's monetary policy and inflation, saying that actually the ECB could raise rates at any time from September. Well, still with us, Andrew Pease, Global Head of Investment Strategy at Russell Investments. Andrew, we also have a great chart looking at European inflation. How do you see this developing? How many hikes, if any, could we see from ECB this year?
The market expects, I think, around about 2 hikes later this year. I think we may get 1 or so. And remember, European rates are starting at -0.5%, so moving back to zero isn't such a big deal. But Europe is in a different state to the United States. The economy isn't as close to full capacity. The core inflation pressures aren't as strong. Most of the inflation is coming from those supply side shocks, which are the hardest ones to deal with. So I think the baseline is that the ECB can be more patient than the Fed. That doesn't mean it won't act at all, but it doesn't need to have to act nearly as aggressively as the Fed. And I wouldn't be surprised if they get away with 1 rate. 2 is possible, but I certainly don't think that they'll do more than the market's currently anticipating.
Andrew, where do you see the best value when you look at European stocks? I don't know, there are some sovereign bonds, but how do you play Europe right now?
Yeah, Europe's been a tough one to think about for a while. It started off the way that, we'd hoped it would in January with some decent outperformance as that value rally started to play out. And a lot of it depends on what's happened with Ukraine. If energy prices start to normalise a little bit, if some of the pressures from the supply chain from Russia, Ukraine start to come off, then we could see that pattern start to resume, which means that then financials start to look good again in Europe and cyclical start to look good again in Europe. But Europe's taken such a big GDP hit. We thought it could grow by over 4% at the beginning of the year. Russia, Ukraine has lowered that GDP forecast by probably around about 2% at least. So it's still above trend, but it doesn't have much more room. And if we see more negative energy surprises out of Europe, that will certainly be negative. So for now, I think Europe probably still can outperform as we go through the year, but a lot will depend on these hostilities subsiding.
All right, thank you so much. Andrew Pieser, Global Head of Investment Strategy at Russell Investments. Coming up, the EU considers ratcheting up sanctions on Moscow over multiple reports that Russian troops executed unarmed civilians in Ukrainian towns. That story next. Well, Europe warns Moscow faces new sanctions for possible war crimes after reports Russian troops executed unarmed Ukrainian civilians. Russia denies this. China's COVID crisis deepens. A surge in cases prompts curbs over the entire financial hub of Shanghai. And the London Metal Exchange under review. The Financial Conduct Authority says it will look into the LME's managing of the suspension and resumption of the nickel market. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. A lot going on in the market, so let's get straight to the markets and try to understand really the dynamics underpinning some of these markets. The markets pretty much struggling for a direction. Now, they opened higher, then they went lower. Traders really trying to weigh the latest developments in Ukraine, with some of the European governments pushing for stiffer sanctions on Russia. There are reports of the troops executing unarmed civilians. So we look at that. We also look at the Treasury yield curve, flashing more warnings that economic growth will slow as the Fed raises rates to tame inflation, stoked in part by these commodities. So we look at the 230s spread, crude oil 99.95, and Telecom Italia. We know that KKR was bidding for the company. They now say they will pull away unless there's due diligence, and that share price down 3.6%. Now, Russia facing further economic isolation as European governments prepare to debate more sanctions on the country after horrific images from Bucha near Kyiv show mass graves and civilian casualties that Ukraine accuses Russia of committing.
Presidents don't usually write down addresses like this, but today I have to say just that, to talk about the discoveries in Bucha and other cities from where the occupiers were expelled. Hundreds of people killed, tortured, executed civilians, bodies on the streets, booby-trapped areas. Even the bodies of the dead were booby-trapped. Widespread aftermath of looting. Concentrated evil has visited our land. The killers, executioners, rapists, marauders who call themselves an army, and who deserve only death after what they've done.
Now for more, we're joined by Bloomberg's Maria Tadeo, who's in Budapest. Maria, the international reaction to the very graphic scenes out of Ukraine over the weekend have been pretty strong. Does it mean retaliation? Does it mean more sanctions?
Well, Francine, at this point, it is obvious that there will be a before and after moment after the pictures coming out of Bucha, especially those reports from Ukrainian officials that they found more than 400 civilians dead, reports of sexual violence, all of this, of course, being considered under international conventions as war crimes. Now, in terms of where we go from here, again, as I said, it's a before and after moment. On Saturday, before the pictures came out, European officials were working on new sanctions, but these were about closing the loopholes. Having said that, at this point, the tension here is that they know that's not going to be enough, and you have to match the condemnation with the action, and that takes us inevitably to Russian energy. This continues to be the moneymaker for Vladimir Putin. So there's a question as to do we embargo it or not, and if they decide to embargo Russian energy, there's also a question in terms of how do you do it. Do you embargo coal first, then move to oil, and finally to gas, which is being seen as a big geopolitical weapon? And a lot of this will depend on Berlin. It had been very against shutting down energy. They believe it could have a real impact on the German economy. But the political debate after those pictures, Francine, is really changing among the political class in Berlin. So a lot of this will depend on the German leadership.
Of course, and in Hungary, where you are, Viktor Orban has won a fourth term. So what are the implications, Maria, of that for the rest of Europe?
Look, Francine, he's won a fourth term, and yesterday in that celebration speech, to me, was striking the type of language that he used. He said, our victory is so big, you can see it from the moon and you can see it from Brussels. So you could see that confrontation, that tension continues. At one point, he also lashed out on the usual suspects, the left, George Soros, the international media, and also, in particular, President Zelensky. Francine, remember, Zelensky lashed out at Viktor Orban about 3 weeks ago when he said, you have to decide, are you with me or are you with Russia? A lot of this feeding into the accusations that Viktor Orban is too cozy with Vladimir Putin. He went to see him right before the war started. But a lot of this, Francine, the bottom line is that we do see that tension continuing between Hungary, the European Union. The money from the recovery fund, as you know, is blocked. They're probably not going to see a cent for the time being, but also a real push and real pressure on European authorities to finally get tough on the rule of law.
All right, thank you so much, Maria Tadeo. They're, of course, covering the election over in Budapest. Now, to talk about all of this, Wolfango Piccoli, Co-President and Director of Research at Teneo. Wolfango, thank you so much for joining us. The EU, in very clear words, now saying it holds Russia responsible for atrocities in Ukraine. With that, will there be an escalation in sanctions?
Yes, I think it's just a question of time. There was already talks, as Maria indicated earlier, about a fifth package by the EU last week. And I think the question is not just about the time, but the content. I think we're going to see more aggressive sanction, not just about tightening loopholes. We're going to see more people. And the big question, whether we got something on energy. If they move on energy, I suspect it's going to be a gradual approach where maybe coal is going to be the first one and else might come later. It will also depend on what we're going to see between now and the end of the week in terms of images from Ukraine. We have seen the images from Bucha. I think there is a risk we might see more coming from Kherson. There were some satellite reports yesterday about some new graves there. So that also is another signpost to monitor.
Wolfango, what are the sanctions for? Initially, they were put in place to try and deter Russia, to make sure that Russia de-escalated this war. It doesn't seem to be doing any dent in that.
Yeah. The sanctions that have been implemented, not just by the EU, but the world coalition, the US and the others, I don't think they were ever to force Russia to change policy. It was too late. Deterrence failed. Russia went in on the 24th of February. I think that the aim of the sanction is twofold. First, to deal with the moral outrage that we have seen in the West in terms of what is happening in the grounds in Ukraine. So there is that response to the public. Secondly, and most importantly, is to cripple the Russian economy long term, to try to undermine the ability of Moscow to project its power and influence abroad long term. That is why our view at Teneo is that regardless of what happens in Ukraine, the sanction will be there for the foreseeable future. The West will be locked in some sort of economic warfare with Russia, regardless of what is the final outcome in Ukraine.
But Wolfango, how do we see actually Russia and China developing this, alliance? I don't know whether it is a new alliance with Russia as a junior partner because of Ukraine.
Well, I think China will be strong in terms of rhetorical support to Russia. They need an alliance like Russia. They have a strategic relationship. There is a personal relationship between Putin and Xi. But on the other hand, let's be very clear. China is the biggest importer for oil and food in the world. So they must not be particularly happy with what is happening here due to the crisis in Ukraine. And I think they're going to be very very careful about not infringing with the sanction, because the message has been very clear from the US that secondary sanction will apply. So China here is in a bit of a tight spot. And certainly the longer the war continues and the more the kind of images we have seen over the last 24 hours will emerge, the more difficult the position of China will be.
Wolfango, do you buy, I guess, the mainstream talk that Russia is really losing this war?
Well, on one side, politically, it is clear that Putin's original political goals are unachievable. Militarily, this is still all to be decided. Basically, yes, there is a retreat going on. Yes, they've been struggling for now more than 5 weeks. And Putin has got a big decision to make, a political decision. If he really wants to intensify the war, he needs to mobilize more people. That will basically, because right now there is no state of war in Russia. You know, the famous label a special operation, which has basically limited the ability to mobilize manpower. So that will be the first decision that Putin will have to make. So it's still on the ground. It can go in all direction, and obviously the key battle will be in the Donbass. And the risk is that, leaving aside Donbass, the rest becomes a war of attrition, where neither side is able to make advances, but where the fighting, the human suffering continues.
How is this war being viewed in Russia? Again, it's difficult to be on the ground to understand if there's still a very big campaign of information, whether people support this war or whether they don't exactly know what's going on.
I think it's a very mixed picture, and I think we should be focusing on the kind of Russia that Putin cares about. This is not, the Moscow, the St. Petersburg of this world, is not the educated elite and so on. It's more a rural Russia, the more kind of conservative Russia. And on that front, the indication that we have is that they are still very much behind Putin and behind the war effort. And on the other way around, the reality is also that the sanction, as you alluded earlier, they have not really beaten. We have seen obviously inflation picking up. We have heard rumors about certain kind of food, specifically sugar, more than else, being short. But still, the sanctions have not really beaten. So that is the issue here in the short term.
Wolfango, what kind of probability today would you attach to a complete oil embargo, either on the Russia side or on the EU side, so that there's no longer a flow of oil and gas from Russia to the EU?
If you asked me last week, I would have said maybe a 30%. This week, I think we need to double it. And I think it will depend on what we see coming from Ukraine in terms of images. The more did we see what has emerged over the last 24 hours, the higher the chances. For me, and we've already seen a softening, a change of tone coming from both Berlin and Rome, for example. But on the other hand, we also have to think about other countries who are hiding behind Germany in terms of their opposition to an oil embargo, specifically Hungary, and especially after the result of the election there yesterday.
Would it be inflationary, or would it actually hurt growth more?
I think the
it's
first
difficult
part,
to model an oil embargo. Yeah.
I think it's very difficult to model, especially because it's never been done with the economy the size of Russia and the EU and so on. I think it most likely would be a bit of both, but certainly the concern of the policymaker in the short term will be about growth. And also the other issue here is that the policymakers in Europe, they have to come honest. They're going to have to start talking to the public and tell the public very clearly what is the cost of this war. So far, there has been no messaging about it. And the question is, we can support the Ukrainians and in all sorts of ways and let them fight the war for us, or maybe in the future, we might have to fight it directly.
Wolfango, there's also, and I know amid all of this news, sometimes we forget, there's also the first round of the French presidential election this coming Sunday. Do you see a scenario where Emmanuel Macron is not president of France in a couple of months?
No, I think it's extremely unlikely. Despite the tightening of polls and everything else, Macron has got a big advantage, and that is the electoral system in France, meaning the second round, where he will end up most likely with Marine Le Pen, there is always a convergence towards the more centrist candidate. So that is basically what saves the day for Macron. I think the key issue for him between now and the election day is mobilizing more voters, specifically from the center left, and maybe some of the Mélenchon supporters.
All right, thank you so much, as always, for your insight. Wolfango Piccoli, their co-president and director of research at Teneo. Coming up, companies with over 250 employees must disclose their gender pay gap today in the UK. We'll take a look at what progress has been made and what work is still to be done on equality next. This is Bloomberg. So today's deadline for UK companies with more than 250 employees to disclose their gender pay gap. Yet again, the statistics look bad, particularly in finance. Well, we're joined by Bloomberg's Charlie Wells, who's going to break down the numbers for us, and Grace Lorden, Director of the Inclusion Initiative at the London School of Economics. So thank you both for joining us. Charlie, 5 years of disclosure, we've barely seen change in the UK gender pay gap. Like, how's that even possible?
Yeah, so what the numbers really show us is that there is a problem with incredibly high executive pay.
Yeah.
And who is making that incredibly high executive pay? Disproportionately, it is men. So in some ways, this is indicative of the fact that women just are not getting promoted into that C-suite. One of the things that we could potentially do is try to recruit more women into finance and potentially help keep them there, because finance in particular is an area where this gap is very large.
So, Grace, you're saying that basically a lot of the banks are recruiting women, but then can't hold on to them. Why?
Yeah, so we do have this missing middle. So, you know, if you ask people this, typically they'll talk about flexibility. And I did an experiment, and I think something like 90 people out of 100 talk about flexibility first. And flexibility is some of the story. And some of the jobs within the financial sector do lack flexibility at the moments that women might need them. But it only explains 33% of the gender pay gap, and it explains very little of the quit rates, actually. I think there were kind of 3 points that I'd like to raise today. So I first think we should change the narrative when it comes to women, moving away from flexibility and really looking at them as talent that need to be brought through the organization in the same way as somebody else. I think the second thing is, you know, to recognize women are perceived differently. So we do still use the expression too often, let's take a risk on a woman. And there is absolutely no evidence that women perform less than men. And I think the last thing that I'll say is that we need to probably stop mentoring women and advocate for them more, giving them more opportunities and more visibility within the organization so they do stay in those senior leadership roles.
Grace, I have a million follow-ups, but first I also want to hear from Charlie on actually what banks have the worst pay gaps and whether there has been any movement on them trying to do better.
Yeah, so more data is coming in today. What we did look at 10 large investment banks in the United Kingdom last year, and what we found is that the laggard there really was HSBC's investment banking arm. So the average pay gap there was 54%. Deutsche Bank was a better performer. They had a 32% average pay gap, but still that is a 32% average pay gap. Yeah. Some of the data is coming in. We're seeing some improvements. HSBC looks like it's moved from 54% to 50%, but again, that is still a 50% gap.
Yeah, Grace, we actually thought that by publishing these figures, it would shame companies and chief executives into doing better. Given the glacial pace that we're seeing, it's not. So what needs to be mandatory? Should we link chief executive pays to equality pay?
Yes. So I think the first thing to say is that transparency is really important. It makes salient who's doing the wrong and who's doing the right thing. If you look at investment banks, if they all stay the same and they all stay stuck, there's no real incentive for others to catch up. So what we need are some early movers, as you say, to link pay, to link incentives to progress within gender within those investment banks. And then I think we'll see progress. We really need, you know, 2 or 3 peers to kind of come out and lead the pack at this stage.
But Grace, does that need to come through regulators, or is there an industry body that would take that on?
I think, frankly, in an ideal world, the investment banks would recognize that women are a talent pool that are untapped, and they would actually utilize that not just to make their business better, but also to make their image better. But in the absence of it happening through markets for reasons of bias or for other reasons that go unexplained, I am a fan of the regulators stepping in.
All right, thank you both for joining us. Bloomberg's Charlie Wells and Grace Lorden, Director of the Inclusion Initiative at the London School of Economics, joining us, of course, on this gender pay gap. Coming up, Tesla delivers a record number of cars in a difficult quarter, and its crypto tokens rise. We'll dive into the details next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, let's check in on the markets. Again, markets actually struggling for direction. If you look at the European stock 600, they opened higher, then they were down, and then they're pretty much unchanged. 2 things I would focus on. First of all, the EU saying it holds Russia responsible for atrocities in Ukraine. Does that mean we're going to get extra sanctions? Could it go as far as an oil embargo? That's what markets are trying to grapple with, and whether that hits growth or whether that hits inflation first. And of course, the other story is what we heard from China with a possible rapprochement between the U.S. and China when it comes to audits. Now, onto corporates. And Tesla delivered a record number of cars worldwide, more than 310,000, in what Elon Musk said was an exceptionally difficult first quarter, slightly edging out expectations. Well, Tesla's crypto token was also trading above its Friday closing price. Joining us now is Bloomberg's global autos reporter, but really he's just on Elon Musk watch. He's our Craig Trudell. Craig, a lot of time, given the importance of Elon Musk and, of course, Tesla, you're focusing on exactly what he said. So what stood out in these numbers?
These were very solid numbers, and there was some debate over consensus. You know, I think consensus, the Bloomberg expectations kind of came down a little bit heading into the number. FactSet had a higher number, but the big takeaway here is that you see steady production and deliveries for the Model 3 and Model Y, which are their big volume models, but also a nice little bump up in the Model S and X. And those are a sliver of overall production and deliveries, but they're important because of just how expensive those models are. They're really solid for the bottom line for the company.
Is the outlook, Craig, a little bit better for this quarter and for the future?
It's going to be really difficult from the same sort of supply issues that Musk flagged in a tweet over the weekend. But you know, you do, excuse me, have the German plant coming.
I'm listening, but he's also dancing, so I'm highly distracted. So if you want to take a cough, Craig.
you have the German plant online, which is a reason to dance. In the coming days, we'll have the plant in Austin, Texas, also come online. That's another reason to boogie if you're Elon. And so you will have, you know, ongoing challenges of getting the chips that you need and getting the other components you need. It's going to be slow going starting up those plants relative to how quickly they were able to get the Shanghai plant up and running. But those incremental bits of capacity are going to be a big help for them through the remainder of the year.
Craig, if you look at some of the supply disruption in Ukraine, how much does it affect EVs in general?
So we've seen the big issue in Ukraine being wire harnesses, and that's affected companies, particularly German automakers, and it has affected Volkswagen's electric vehicle production. There isn't a huge issue in terms of other components. There was a concern that neon gas, which is used for semiconductor production, was maybe going to disrupt the industry. Those fears seem to have been sort of overblown and addressed. But those wire harnesses, you have a situation where you know, plants with thousands of people have had to sort of, you know, adjust to this new reality. That's been a big adjustment for the industry to have to make.
All right, Craig, thank you so much. I missed the Elon dancing. We don't want to see
Bring
pictures.
it back.
We just want to see the dancing of Elon Musk. Craig demanded we see the dancing, otherwise he'll no longer come back. Craig, thank you so much. Craig Trudell there, Bloomberg's global car. There he is, with some good news by Elon Musk. A really famous DJ, apparently. Really, really famous. Bloomberg Surveillance Early Edition continues in the next hour. I think Matt Miller has some moves of his own. He'll be joined by Kailey Leinz in New York. Guy Johnson is in London. This is Bloomberg.
We called on China to help end the war in Ukraine. China cannot turn a blind eye to.
We've been habitually overestimating Russian capability and underestimating Ukrainian capability.
Concentrated evil has visited our land. The killers, executioners, rapists, marauders who call themselves an army and who deserve only death after what they've done.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kailey Leinz.
10 a.m. in London, 5 a.m. in New York, 5 p.m. in Hong Kong on this Monday, April the 4th. Our top stories today. Outrage over atrocities. More European governments are pushing for fresh sanctions after shocking images emerged from the liberated city of Pooja near Kiev. Despite this, negotiators may resume virtual peace talks today. Meanwhile, the United States will send Ukraine $300 million more in military and medical aid. And in China, the coronavirus crisis grows. There's been a big jump in daily infections, and Shanghai is preparing to test all 25 million residents. Welcome to Bloomberg Surveillance Early Edition. I'm Guy Johnson in London with Matt Miller and Kailey Leinz in New York. Anna Edwards is off today. Kailey, let's talk about the Asian session. Quiet but solid would be the way I would describe that.
Yeah, that's pretty accurate, Guy. It was a mostly upbeat session for equities in Asia overnight. You had the MSCI Asia Pacific Index rising by nearly 1 full percentage point. Keep in mind, though, China was closed for a holiday. The real outperformance coming from Chinese tech stocks listed in Hong Kong. This really following on the move we saw on Friday after Asia's close, Beijing announcing it will relax some auditing rules so that the U.S. can get access to the audits of Chinese companies listed in the U.S., maybe prevent the delisting of a number of those. So you saw that reverberating through the Asian session. The Hang Seng Tech Index up about 5.5%, with individual names like Baidu, which was up about 7% in the U.S. ADRs on Friday, up at nearly 8% in Asia overnight. Finally, in other asset classes, I would just do my daily check, Matt, on the Japanese yen. A little bit weaker against the dollar today. 122.61 is where we sit. So off the weakest level since 2015 that we saw last week. But of course, 122, that is still a very, very weak yen, Matt.
All right, so we have some positive and negative impulses coming through from China. Futures here are pretty much unchanged on the S&P 500. The 2s, 10s is what everyone is watching, I think, right now. We're still inverted, 5.7 basis points. So we'll continue to ask people what this means, not only for the U.S. economy, but really for stocks. And maybe it's a negative for the former, but a positive for the latter if you're long. NYMEX crude over $100, but just at 125 cents. So crude up about 1%, not doing much today. And Bitcoin also not doing much, down about 0.5%, but still 46,137. It's had this slow and steady rise and is holding at that level, Guy.
Matt, I'm not sure this is a weather map or a market map. It is pretty grey in Europe today on both fronts, unfortunately. The CAC Chiron really summing it up really quite nicely. Nothing happening really on the equity front. The only area that I would focus on is Switzerland. You are seeing the big drug makers rallying today. Novartis out with news in terms of cost savings. That's lifting that sector. But elsewhere, nothing really going on. In fact, it's the pharma sector up. It's the car sector down. Matt, I'm really sorry about that. So the stock 600 only up by 0.2%. What I find fascinating, guys, is that the bond market here in Europe is catching a bid. Initially sold off, then coming down. This is the Europeans really point the finger at Russia, and fresh sanctions may be coming. It seems as if the market's taking that as a potential growth shock rather than inflation shock. Euro dollar doing nothing. We're still north of 110. Brent is up by 0.7%. Though Mark Cudmore is talking about it testing its trend line, Kailey. Let's talk about what is happening with those Russian assets. Tony Blinken, Secretary of State, come FX strategist, is talking about what is happening with the ruble. The ruble trading 83.76. I'm not sure that price is real, guys, but nevertheless, he says the recent rally not sustainable. And judging by today's price action, maybe he's a little off the mark. Kailey?
Yeah, indeed, Guy. And of course, that's not the only thing we heard from Antony Blinken over the weekend. We'll have more on his remarks in just a minute. Now a look at what else is ahead this week. Today, the Senate Judiciary Committee will be voting on the nomination of Ketanji Brown Jackson to the Supreme Court. That's ahead of a full Senate vote, likely later this week. On Wednesday, the FOMC minutes are released. We'll get some insight into what the Fed was thinking when it formulated that March rate hike. Also on Wednesday, oil executives are set to testify on gasoline prices at a House hearing. Then on Thursday, the Fed speak will continue. James Bullard, Raphael Bostic, and Charlie Evans all will be speaking. Plus, Peter Thiel, Kathy Wood, and Michael Saylor are also set to speak on Thursday at the Bitcoin 2022 conference in Miami, Matt.
We will be watching that very closely. Now let's get back to Russia facing further economic isolation as European governments prepare to debate more sanctions on the country. Images from Bucha near Kiev showed mass graves and civilian casualties that Ukraine accuses Russia of committing in their retreat from around the capital. Ukrainian President Vladimir Zelensky spoke on CBS News yesterday.
Indeed, this is genocide. The elimination of the whole nation and the people. We are the citizens of Ukraine, and we don't want to be subdued to the policy of Russian Federation. And this is the reason we are being destroyed and exterminated. And this is happening in the Europe of the 21st century.
For more, let's go to our European correspondent, Maria Tadeo, who is in Budapest. She's been following the story. And, you know, Maria, the interesting thing is the most painful sanctions would, of course, be to stop buying Russian gas and oil. But the Germans just can't wean themselves off of that without hurting their own economy too much. We just got comments from Deutsche Bank CEO Christian Sewing saying that Germany will fall into a recession if the oil and gas supply is disrupted.
It is, Matt, but at the same time, we've all seen the pictures and the images out of Bucha, the very serious allegations there of mass graves, more than 400 civilians killed, accusations of sexual violence. All of this, of course, as you know, are war crimes and would be seen as war crimes. And you're very right. At this point, it is very clear and it's very obvious for everyone to see that we've tested the limits of the sanctions that we have until now. The small, the targeted, going after the oligarchs, that is not working if the goal here was to stop the invasion. The invasion, by the way, continues in Ukraine. So the real question is, are we going to see Europe banning and going for an energy embargo on Russia? And inevitably, Matt, this is going to be the debate. Brussels, Germany, you're very right to point out, has tried to delay this, but ultimately that is where we're heading. And listen, Matt, a lot of my sources that I've been speaking with, they say that they're going to have to match the tweets, the condemnation, with the actions. Now, the question here is when and how far do you go? And when you talk about banning all of Russian energy, do you talk about coal? Is it oil or is it gas? And do you do them all at the same time or do you do it gradually? But there is growing pressure in Berlin to try to tackle this sector. And the thing that caught my eye, Matt, over the weekend, I did see German politicians, economists, commentators finally putting that question to themselves, saying if this is the price we have to pay, a recession, an economic perhaps shock to Germany, but we put an end to this war or we accelerate the end of the war, maybe this is something that we should now start to consider. It doesn't mean it's going to happen, but the political debate is shifting.
Maria, thank you very much indeed. Maria Tadeo in Budapest. Let's talk about the reaction in Washington. The US Secretary of State, Antony Blinken, Sunday, calling the images of alleged Russian atrocities a, quote, punch to the gut. He did, though, stop short of labeling them as genocide. Anne-Marie Hordern, Bloomberg's Washington correspondent, back in D.C. Anne-Marie, what kind of a reaction should we be expecting from Washington?
Well, at the moment, Guy, it's really just harsh words directed at Russia. But also, the fact is, a month ago, we had a formal determination from the United States that Russia was carrying out war crimes. So they were already looking into this. The President of the United States has called Vladimir Putin a war criminal. And in Poland, he also called him a butcher. Secretary of State Antony Blinken, on top of saying it was a punch to the gut, he took to Twitter and he said, we strongly condemn these apparent atrocities by Kremlin forces in Bucha and across Ukraine. We are pursuing accountability using every tool available, documenting and sharing information to hold accountable those responsible. So the United States is going to press ahead with that formal determination they have made about war crimes last month. And I'm sure the president, when he gets asked about this, will have some very harsh, frank words for Russia.
Yeah, of course, the president traveling back from Delaware to D.C. today. We'll watch and see if he has any remarks to make along the way. Thank you so much to our Washington correspondent, Anne-Marie Hordern. Now over to China, where the COVID-19 situation is on a knife's edge, with the lockdown of its financial hub intensifying amid a surge in new cases. This is 25 million people in Shanghai face restrictions. For more, we're joined by Bloomberg's Enda Curran in Hong Kong. And clearly, China's still in pursuit of its COVID-0 policy. Is there an end in sight?
No end in sight just yet, Kailey. I mean, this clearly will be the biggest test of it. We're talking about 9,000 odd new cases in Shanghai as of yesterday. That means China is battling now its worst outbreak since the pandemic began. On the ground, of course, in Shanghai, like you mentioned, strict lockdowns, mass testing, thousands of officials coming in from around the country to assist in those exercises. There is disruption to production, for example, at Tesla's plant there. Everybody's keeping an eye on the port to see how much disruption there will be at the port. And of course, as you mentioned, it all comes down to where does China go from here? Will they stick with this dogged zero, COVID-0 approach, which means a lot of disruption to consumers and potentially manufacturers, or do they change course and do more on the mRNA vaccine side of things? We don't know yet, but all the indications are they're sticking with COVID-0, and that's what's causing so much disruption in Shanghai.
It does look like they're holding very tight to that policy. And in terms of Hong Kong, we see that Carrie Lam is not going to go for another term after the twin crackdowns on democracy and COVID under her rule.
Yeah, exactly. Carrie Lam's term will come up by the end of June. Matt, that will be the end of her 5-year term in office. Obviously a very significant period for the city. We saw so much political change. Then, of course, the pandemic and the response to the pandemic has caused so much disruption on the ground as well. The question, though, will be who replaces Carrie Lam. We don't yet know. The nomination process runs for 2 weeks. Whoever will come out of that process will, of course, be handpicked and favoured by Beijing. There are some reports in the local media about some of the existing cabinet members showing some interest in that role. John Lee, for example, the cabinet secretary, being chief among those. He's got a policing and security background, so obviously if he gets the top role, he would be coming from quite a different background to the one that Carrie Lam came from. So Carrie Lam moving on, probably no great surprise, but I think there will be a lot of focus on who Beijing does approve to take over that role, and we should get some indication on that when the nomination process wraps up within 2 weeks.
Thanks, Enda. Really appreciate it. Bloomberg's Enda Curran joining us on what is happening in China. Let's turn to what is happening at the London Metal Exchange. The LME is facing regulatory reviews after a massive short squeeze led to weeks of turmoil that paralysed the nickel market. Bloomberg's Danny Berger joins us now. Danny, I find it really fascinating that the FCA is launching this review. It's one of a number of reviews. The FCA, according to many people involved in this process, was the regulator that was asleep at the wheel. Is it now trying to play catch-up?
There does feel some degree of that, because we are almost, if you can believe it or not, almost a month away from when this happened. It feels like yesterday. And there has been so much criticism that it was perhaps inevitable that the FCA steps into review. Again, Guy, is the question too little, too late? So as to what they're doing, they're reviewing not just the suspension, but the resumption of nickel trading as well, which ran into a lot of complications. They frequently had to stop trading, suspended, as we saw breaches of the trading ban that the LME put in place. Now, it's not just the FCI, I should say. The BOE also taking part in this investigation that they announced around 7 a.m. UK time. The BOE, for its part, will be looking into clearinghouse operations. And both of them aren't just looking at the LME. They're also looking at participators in nickel trading firms that perhaps didn't have correct risk management because margin calls were unable to be met. Now, just as this announcement came out, minutes later, the LME comes out with its own announcement saying, hey, we are also appointing an independent commission to review what happened. This could lead to disciplinary action. It could lead to market reforms. But they also said that they're going to have more transparency in the market for off-exchange OTC, over-the-counter reporting, which is usually left in the dark. For now, all metals trading, they're required to disclose it. It's a disclosure they've already put in place for nickel after this very chaotic session. But now, Kailey, they're saying we're going to have more transparency across the board, so you'll get a bigger clue into what firms are trading what and how at the LME.
All right, so the LME trying to make adjustments as regulators bear down and take a deep look into what happened. Thank you so much to Bloomberg's Danny Berger. Now let's get back to the U.S. markets and take a look at some stocks moving in pre-market trading. I want to begin with Starbucks. As of today, Howard Schultz, the company's founder, back in the CEO role, taking over at least on an interim basis for Kevin Johnson. And immediately he announces a suspension of the share buyback program, saying that cash can go to stores and staff instead. Starbucks down about 1% as a result. Also want to get a check on shares of Tesla. We got those first quarter delivery numbers over the weekend, a record just over 310,000, coming in just above analyst estimates, working through the supply chain issues, including China's COVID-0 policy. And on that note, the Shanghai factory is still shut down today. Of course, that's been going on for about a week as we see the lockdown in the city that Enda Curran was talking to us about. Tesla is up about 1%. And speaking of China, we are seeing a rally in ADRs of Chinese tech companies here in the U.S., following on from what we saw on Friday and in the Asian session overnight on this Monday. JD.com, one of them, it's higher by about 6 percentage points before the bell guy.
European bonds bid as well, which is fascinating, I think, in terms of the inflationary shock that could be coming towards us. We'll talk more about that coming up. Pooja Kumra, TD's senior European rate strategist, is going to be joining us. We're going to be talking about the future of online payments. We're going to be speaking to the CEO of Klarna. That conversation coming up a little later in the show. Plus the 30-year-old crypto billionaire who wants to give his fortune away. More from today's Big Take ahead. This is Bloomberg.
Welcome back to Bloomberg Surveillance. This is the early edition. I'm Matt Miller with Kailey Leinz here in New York. Guy Johnson with us out of London. Anna Edwards is off. We are focused on the yield curve, really, when it comes to what to watch in markets. I think a lot of people at their desks are going to be pulling up this ticker, USY C2Y10 index, to look at the difference between the 2s and the 10s. Right now we're inverted, still inverted after Friday, to the level of about 5.5 basis points. Pooja Kumra joins us right now, TD's Senior European Rate Strategist, to talk about what this means. I know it's basic, Pooja, but what does it mean to you?
Good morning. Yes, the 210 is garnering a lot of attention from markets now. Definitely, when you have a hiking cycle, you do see flatter curves because markets price in a lot of rate hike expectations in the front end. And when it comes to long end, markets are pricing slower growth, tighter financial conditions. But what has happened this time is that the move in flattening has been very aggressive. I won't say it's imminent of a recession per se, because we also need to note that the fact that part of the curve moves are also driven by the fact that the entire 10-year sector, the long end, is been bought by central banks via QE, and still treasuries are a safe haven asset. So I think that is also something that has been adding to the inverting pressure that we have seen in the curves.
Do you think the Fed cares that the curve is inverting? It's not looking at this curve. It's looking at a different curve. It's looking at a curve at the front end. It's looking for 3s, 18s. What does it care about 210s? Do you think that's a mistake, or do you think it's the right way to go for the Fed?
That's a very interesting question, because the Fed has been asked this question quite a number of times, that what do you think about inversion? And right now, they're not scared about it. I think right now, they want to focus on the fact that price stability is their key mandate, and which requires aggressive hiking. And that's what markets are pricing right now. But we haven't seen any fears from Fed with respect to 210, just given the fact that Treasury does remain a safe haven assets, even though we have an aggressive policymaker.
All right, so maybe the Federal Reserve isn't too concerned with the spread between 2- and 10-year Treasury yields. What about the ECB and its concern with spreads between core and periphery, Pooja?
From that perspective, periphery is in very better condition as compared to previous crises. What they are more concerned about is also not only the peripheral spreads, but also the credit spreads, which really widened during the crisis. And I think that's the financial stability is still a big part of their policy, including inflation. But I think with respect to ECB, they have been very clear that any path would be more towards a gradual normalization, unlike Fed, who has hinted more restrictive policy. And I think that's where we think that we could see more of a widening move in treasuries versus bond spreads, just given the fact that even though both central banks are on tightening move, but their way of moving will be definitely different.
On the subject of the ECB tightening in particular, is the pricing of that at this point too aggressive, or hasn't gone far enough?
So the thing is, the pricing has come down a bit. We are pricing around 50 basis points in hikes by end 2022. And that's basically in line with the key hawks in the market. I think if we continue to have such big inflation prints, it will be hard for markets to remove this 50 basis points rate hike move, especially ahead of the June meeting. I think June will be the key meeting where Lagarde is able to provide us what are the forecasts post the entire Ukraine-Russia crisis and what the impact it has on the war. So I think that would be key. Our base case is ECB just goes once, and that will be in December with 25 basis points. But I do realize the fact that if you are pricing in so many hikes with Fed as well as BOE, it will be hard for markets to just remove the 50 basis points that is being priced by ECB right now.
How much, Pooja, do you think Christine Lagarde watches the euro-dollar exchange rate these days? I mean, does it matter to her if there's a coming recession to keep the local currency weaker?
I think right now she's just watching the moves in oil and commodities. I think right now we haven't sensed much of a fear with respect to Euro-USD. They have, I think, a weaker euro is helping them. But I think the key would be the financial conditions, which is basically some place where most central banks are keeping an eye on. And that's why we saw a lot of liquidity form of easings, whether more repo operations or just to support the normal liquidity in the system, which has got hampered with this crisis, with actually risk improving. I think Christine Lagarde should be in a better position as we head towards next week's meeting.
All right, we have to leave it there, but thank you so much for joining us, Pooja Kumra of TD. Now, keeping you up to date with news from around the world, here's the first word. President Biden is calling on Congress to act on gun-related issues after a deadly shooting in Sacramento, California. Police say at least 2 shooters opened fire early Sunday as bars closed for the night. 6 people were killed and 12 others were wounded. In Turkey, inflation rose to a 2-decade high in March. Consumer prices rose at an annual rate of 61%, and annual producer inflation was in triple digits for a second month. A 3-month policy pause by the central bank means Turkey's interest rates are the world's lowest when adjusted for prices. In Hungary, Prime Minister Viktor Orban scored an overwhelming election victory to clinch his 4th consecutive term. His party maintained its 2/3 majority in parliament. Orban overcame criticism that he is backsliding on democracy and is too close to Vladimir Putin. And Ukrainian President Volodymyr Zelensky made a surprise taped appearance at last night's Grammy Awards. Zelensky implored people to speak out against the war on social media and TV. He told the music industry, quote, "Our musicians wear body armor instead of tuxedos. They sing to the wounded." And Matt, of course, this is just the latest in a series of appearances by the Ukrainian president, proving he's not only just the commander-in-chief of Ukraine, he's their communicator-in-chief as well. And he has been bringing that same message really all across the world, imploring people to give whatever aid to Ukraine that they can.
Yeah, absolutely. And it is inspiring, but you wonder what happens when Russia brings more power to bear, when they move more troops down over to the Donbass region and use heavier artillery. Guy, it just is concerning to me. It seems like we're watching the beginning of a real tragedy unfold here.
Oh, absolutely. You see the pictures coming out of many of the towns that are now being liberated. They are utterly horrendous. The other thing, Matt, is that the Russian forces have been limited to using roads because the ground's been wet. The ground is now going to start drying out, which means that they have greater capability in terms of operating on that ground. So potentially that would allow them to move with greater speed. It's going to get, as you say, really, really ugly. And the pictures this weekend are just stomach churning. Some of the images that have come out. I don't know. The sense certainly here in Europe, you look at the market reaction this morning, the Bund is getting a bid. And the reason for that seems that extra sanctions are coming. Christian Savings warning of a recession if we get anything on energy. So terrifying in terms of the impact it could have on the European economy, Matt.
Yeah, absolutely. We hope that they find an end, and apparently they're going to be negotiating again today, but it's hard to see how that happens amidst allegations of war crimes.
Absolutely. We will continue the discussion, focus back on what is happening with the consumer. Klarna's CEO is going to be joining us. That conversation is coming up next. This is Bloomberg. This is Bloomberg Surveillance, early edition, and here's what you need to know. Outrage over atrocities. More European governments are pushing for fresh sanctions after shocking images emerge from the liberated city of Bucha near Kiev. The European Union says it holds Russia responsible. Despite this, we may see the resumption of virtual peace talks today. Meanwhile, the US is going to send Ukraine $300 million more in military and medical aid. And in Shanghai, more than 9,000 new cases of coronavirus were reported Sunday. Thousands of medical staff have arrived as the city prepares to test all 25 million residents. Meanwhile, there are reports in China that new substrains of the Omicron variant have now emerged, Kailey.
And Guy, we are getting some breaking news. JP Morgan CEO Jamie Dimon releasing his annual letter and saying, among the very lengthy letter, that he's calling for more sanctions on Russia, also expressing pity for the Federal Reserve. Of course, those sanctions on Russia, he says, do threaten potentially to hurt the global economy, slow the global economy, in that it could easily get worse. He also says that he does not envy the Fed for what it must do next. The stronger the recovery, the higher the rates that will follow. And Matt, of course, that is something that JP Morgan, and as well as banks across the board, has to consider. But even despite potentially some of the damaging ripple effects of the sanctions on Russia, he is calling for more, given some of the atrocities that have been reported.
Yeah, so probably higher interest rates wouldn't be the worst thing for the bank. At least they'd have higher net interest margins, right? But the slowing of the economy, obviously problematic for growth at the bank as well. Nonetheless, Jamie Dimon often puts his concerns for the world before his concerns for the bank. In this letter, it's very long, as you said. In the past, it's been 40, 50, 60 pages long. So the question is when we're going to be able to read through the entire thing and give you all the details that you need. We're on it, Guy, right now.
Absolutely. You need a steeper curve for the net interest margin, and I think Jamie Dimon would certainly like that. He does talk about the Fed, which is interesting. He expresses pity for the Fed, which finds itself in a really difficult place right now. You've got the potential growth shock coming. You've got potentially a slowdown in the consumer behavior that we're seeing at the moment, certainly consumer spending, Kailey. And then you've got the issue of how aggressive do you want to be on the inflation front. Balancing that dual mandate is going to be a real challenge.
Absolutely, Guy. And of course, you were talking about how banks would like to see a steeper curve. That's certainly not what we really have seen over recent weeks. I do want to get a check on the markets, not just the bond market, but equity markets as well. Really, there's not too many fireworks today. Right now, you are up about 0.25% on the stock 600 in Europe, while futures are relatively unchanged here in the U.S., up less than 0.1% on S&P E-minis. But talking of that curve, more steepness is coming in today from where we were on Friday, but that still leaves us inverted on the 2s10s curve right now, inverted by about 6 basis points or so. And then just checking on oil as well, we are sub $99 a barrel on WTI, down about 0.3%. 98.97 is where we trade. And of course, we heard from Vital over the weekend saying that the oil market is not accurately pricing in the risks, not just in terms of Russia's supply, but also China demand, and increasingly looking like a not so likely Iran nuclear deal, which also removes some of the idea that Iranian crude will be coming back onto the market. So does crude south of $99 accurately reflect that is an open question. So let's talk more about these markets. Joining us now is Christine Aquino, Bloomberg Markets editor. So Christine, let's come back to the yield curve and Jamie Dimon's letter warning of potentially the ripple effects of sanctions on Russia. As the EU looks potentially to intensify those given allegations of war crimes in Bucha, how can we expect that to ripple through a bond market? As Guy alluded to earlier, it looks like European bonds are bid potentially on that growth threat today.
That's right, Kailey. I think that really underlines the very big risks that are still lurking in markets, even if we're seeing a little bit more upbeat sentiment on the equity front. And that's where bonds really come in, especially because we saw that record decline in the first quarter for treasuries that is the biggest on record, nearly a 6% decline. And so at this point in time, you'd probably start to expect investors thinking about hunting for those bargains in treasuries, especially at a time, again, when some of these underlying risks are coming back to the fore. Certainly, you'd want to be owning bonds here, and you could be owning bonds at much cheaper levels than perhaps at the start of 2022.
How should we think about a recession in Europe? Matt, talking about what's happening with the inverted curve stateside. We don't have that here yet, but Christian Saving, the CEO of Deutsche Bank, and he's got a pretty good handle on what is happening with the German economy, talking about the fact that Germany could enter recession if oil and gas supplies are disrupted. There's talk this morning of much more aggressive sanctions after the atrocities that were reported over the weekend. You get those sanctions moving in the direction of oil and gas, you get the recession. How does the ECB respond? That, I think, is what the European bond market, as Kailey says, is trying to figure out here today.
Absolutely, Guy. And how does the ECB respond? With much difficulty, for sure, because already coming into this next meeting here in April, they were already having to navigate between the potential inflation response, because we've seen runaway numbers from a lot, really across the board in major European economies. But then, of course, again, the underlying growth risks and the underlying risks from a potential Russia cutting off its gas supply to the rest of Europe, which is going to be catastrophic, shall we say. And so it's really that balance between responding to those inflation numbers that have really become quite widespread, deeply entrenched, and that growth risk. I think it's going to be very difficult for the ECB to take a look at this. And this, I think, is why, we saw that story of negative yields kind of ending last week with a 2-year yield turning positive in Germany. But it really hasn't been sustained, because there's always this underlying risk related to Russia. Europe's exposure to that is really much greater than the U.S., and here's why we're here.
I keep, thinking of the discount European stocks trade at compared to U.S. stocks. about the fact that here in America, everybody is saying there is no alternative. Where else are investors going with their money in Europe?
Well, Matt, I think there is a version of that in Europe, but perhaps less indiscriminately. Again, Europe has always been touted as the value play, and 2022 was meant to be the year that Europe finally capitalizes on that value appeal. Of course, lots of things have happened since the start of 2022 that have taken away from that story. But, I think banks are still quite popular here. We're also starting to see some talk about potential European sectors that could serve as inflation hedges, especially as investors try to take into account really those incredible inflation numbers from the Eurozone.
Christine, thank you very much indeed. Bloomberg's Christine Aquino. What have we got coming up for you next? The 30-year-old crypto billionaire who wants to give his fortune away. More on today's Big Take next. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the principal room. Coming up later today, former U.S. National Security Advisor John Bolton. That's at 8:30 a.m. in New York, 1:30 p.m. in London. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz with Matt Miller in New York and Guy Johnson in London. Anna Edwards is off today. Well, crypto billionaire Sam Bankman-Fried wants to give his fortune away. The CEO and co-founder of cryptocurrency exchange FTX says he wants to spread his more than $20 billion in wealth with those who need it. For more, Bloomberg's Zeke Vox is joining us. He wrote today's Big Take. You can find it at NI Big Take Go on the Bloomberg terminal as well as online. So, Zeke, he is an effective altruist. Can you explain what that means and how it informs what he is doing with FTX and with the money he's earned from it?
Well, it's pretty wild. I mean, there's a lot of rich people. There's a lot of rich people who want to give their money away. But the weird thing about Sam is that when he was in college, he met with someone from the effective altruism movement and decided to pursue something that this guy called earning to give. And that's the idea that if you're really committed to changing the world, to like doing the best for the world, you should, instead of actually going to work in philanthropy or become like a doctor and treat people in poor countries, you should be a banker and make as much money as you can and then give it to charities so that you can multiply your impact. So about like 10 years ago, he said, okay, like that sounds about right. I mean, it's kind of a controversial idea, but he wanted to pursue it. And now here we are, and he's got $20 billion fortune, and he is saying that he's, still on track to give it away.
There are really fascinating criticisms of effective altruism. You include them in your story, and we don't need to go on at length talking about that now. What I find the most fascinating is that he is able to really make decisions and then move on, right? He says, I don't want to constantly reevaluate, the turns that I've taken. It's not just with effective altruism. He seems to do it with a number of choices throughout your article.
Yeah, I mean, this guy really seems to think in terms of expected value. He's like, if I do X, what are the chances that it will make X amount of money? And if that's like the best thing by that metric, then I'm going to do it. And that's why he got into crypto. He wasn't really a crypto guy. He's not one of these like Bitcoin fixes everything kind of people. He just saw, he was a trader and he saw an amazing arbitrage and thought, hey, I could make huge money here. I'm going to start trading crypto.
Zeke, is he for real?
Yeah, it's a great question. Everyone I talk to is like, this is the same person that I've known since he was a kid. He's always been really committed to this because right now he hasn't really given that much away yet at least for someone who has $20 billion. He's spent more on advertising his cryptocurrency exchange, hiring celebrities to endorse it, naming the Miami Heat arena after it. He's given away about $100 million so far. But he says this year he's going to get that up to at least a few hundred million, maybe as much as $1 billion. and that it would be, as one of his friends told me, it would be a really weird way to ruin your reputation to say that you're going to give all your money away very publicly and then not to do it. So, but even Sam said the only way to know for sure is to watch and see his actions.
Zeke, it's a great story. Really loved reading it. Thanks so much for joining us. Zeke Fox there from Bloomberg News. You can read all about crypto billionaire Sam Bankman-Fried and the latest big take and catch him live on Bloomberg Crypto tomorrow as well. Kailey and I have this program. It happens every week on Tuesday at 1 p.m. You should definitely be tuning in or watching it online. Sam Bankman-Fried joins us as our guest tomorrow. Again, 1 p.m. New York time. Definitely don't miss it. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Guy Johnson in London, Matt Miller and Kailey Leinz over in New York. Guys, post-Brexit London racing to keep its head start when it comes to the world of fintechs. UK Fintech Week, which is underway, aims to showcase Britain's financial technology sector and its global ambitions. Joining us now from the event is the CEO of the payments company Klarna, Sebastian Siemiatkowski. Sebastian, thank you very much indeed for your time today. Look, the headlines at the moment here in the UK and elsewhere are all about the cost of living squeeze. Consumers are being hit and hit hard. How does this impact your business?
Well, two things, right? I mean, first and foremost, obviously, part of our business is about making things slightly more affordable. The ability to put something on a short-term installment. So I think from that perspective, you know, we can expect to see consumers see more value in those services. I also think that because we don't charge interest, when consumers, you know, compare and are going to see increasing rates on their credit cards, I think our products may become even more attractive. But I think also from our perspective, on the other hand, you know, one of the strengths of the businesses is that this is very different than your typical bank, right? We have 70% of our balance sheet has been originated in the last 3 months, and we turn around the balance sheet 12 times a year. So this means that our agility, our ability to adopt our business as we go is much higher than you would see with a traditional fintech or banks, and I think that also makes us feel more comfortable going into a changing environment.
Is the buy now, pay later label correct for the business? Because when people talk about it, that's what they say. Certainly that would appear to be the most accurate description, but is that what you want to be?
No, I don't think it actually is entirely accurate. I mean, what's interesting, if you look at our global volume of payments, 40% is pay now, where people pay the full amount up front. We do believe that in an e-commerce environment, when you shop online, there is some benefits to credit over debit because you can touch and feel the product before you pay for it. You don't have to wait for your money on a return and so forth. But in stores, obviously, pay now is even larger. We have over 1 million cards issued. We have billions in depositors depositing money with us. So we have tons of other financial services. So I think that is a slight simplification of our business.
Yep.
And really our ambition here is to create a competitive pressure on the retail banking space.
I mean, I spent a lot of time online shopping like everyone else over the past couple of years. In Europe, I always see the Klarna name associated with my payment. I never know exactly how it works. I just put in the card or the Apple Pay or whatever, and you see the secure connection happening. Where do you want to grow to, Sebastian? And also, not just regionally, but in terms of your business, going from BNPL to, instant payments to what? What's next for Klarna?
Right. Well, I think first and foremost, what it's all tied back to is what is it that makes customers, hesitate to make a purchase? They may be worried about the price, they may be worried about, am I buying the right product? They may be worried about, can I afford it? Do I have the money and so forth? Anything that we can do to make consumers feel more comfortable is actually growing and accelerating commerce overall by doing so with the customer's best interest at heart, right? So I think there's tons of opportunity to do that. And one of the things that really sets us apart that I think is interesting is on every transaction Klarna process, we have SKU level data, meaning we know not only that you bought for $100 at H&M, we know exactly what sweater, what size, what color. We then expose that back to consumers. So when you look in our app, you can see your purchase history on a much deeper level than you can do in your credit card statement. As much as these may sound the details, they're very, very fundamental to the experience. They save people time, save people money, and builds that preference towards a Visa or MasterCard or a PayPal. And so that's kind of the longer term opportunity that we see to provide a service that's just richer in data and adds more value to consumers, and that's going to grow preference. The other ambition, and what's great now, is we're live in 45 markets, right? So we're not anymore a local player. We actually do have that global presence, and that's very instrumental when we, have contracts with Macy's, Sephora, H&M, Zara, et cetera, right? So I think that there is really a huge opportunity there to provide financial services of higher and payment services of higher value than what you've seen historically.
I wonder about the impact of Russia's invasion in Ukraine. How has that affected your business? I know personally there are a lot of connections. Your parents were in Poland when the Germans and the Soviets divvied it up. In Sweden now they've rearmed northern bases. How is it affecting the business?
Well, I think, kind of oddly for from our perspective has been the fact that we actually didn't have any business in Russia. We didn't have any business in Ukraine from a Klarna perspective. And so as a consequence of that, we basically, on the day of the war starting, we realized very quickly that all of our staff was actually safe and not in the areas affected. And ever since then, we've just been trying to, as I guess a lot of other companies, trying to rally support, trying to raise donations, match donations, do a lot of things. But there has been limited effect from that perspective.
Sebastian, we'll leave it there. Thank you very much indeed. Greatly appreciated. Klarna's CEO, Sebastian Siemiatkowski. Thank you very much. Okay, let's turn to another financial organization that is certainly focusing on the buy now, pay later business, but it's got a few others to think about as well. JP Morgan's CEO, Jamie Dimon, releasing his annual letter to shareholders. It is always an interesting read. It's always a long read. Michael Moore, Bloomberg finance editor, I'm sure has read it all. Good morning. Let's talk a little bit about what's in it. What are the key headlines that we should be taking away from Jamie Dimon this year?
Yeah, what we often see from Jamie is as much about public policy as about his bank itself. Sometimes that's been criticized in the past. Sometimes it's seen as, JP Morgan is so tied to the U.S. economy because it's so giant that perhaps public policy is where he should be, weighing in. So here we're seeing him call for further sanctions on Russia. That's notable because JP Morgan did have a decent business in Russia, underwrote a lot of debt there, but they have pulled back, as have others. So you see, Jamie even taking a harder line there and saying that over time it could cost them $1 billion from their exposures to Russia, but they don't see that as particularly meaningful in the grand scheme of things. Also, a lot of commentary on the Fed. A year ago, Jamie's letter was quite upbeat, talking about an economic boom coming out of the pandemic. This year, with the inflation fears, with the war going on, a much more subdued tone, talking about the Fed needs to, really thread a needle here to control inflation and keep growth going.
Would he, he always touches on global issues, geopolitical issues, although obviously in his role as CEO, he needs to look after the bank's interests. If he thought, sanctioning Russia, harder sanctions on Russia would cripple JP Morgan, but it was the right thing to do, would he still call for it?
Well, I'm not in his head, so hard to say there. But I think, because it was not that meaningful of exposure, because they've already started the pullback, I do think he, has less of that conflict going on. You've already seen them, they had the Sberbank CEO on their International Advisory Council. He's now been removed. JP Morgan, pulling a lot of business from Russia. So his words are consistent with the bank's actions so far. And you said, as you said, having to weigh in on the business as well. I think the biggest thing from JP Morgan's perspective that's in the letter is more defense of their acquisitions and their investments. There's been, some investor concern about the rate at which they're spending right now and whether those investments are going to pay off. And you saw Jamie Dimon really take on those criticisms and say we expect many of these to pay off within a few years.
Michael, thank you very much indeed. Bloomberg's Michael Moore. We're all off to go and read that letter. It'll take us the rest of the day, but I'm sure we're all going to dig in. That's it for the early edition. Bloomberg Surveillance, of course, is coming up next. We're going to hear from the former US National Security Advisor John Bolton, amongst some other great guests coming up on Bloomberg Surveillance. There they all are. That show next. This is Bloomberg.